Hello everyone and welcome back to Sudden Wealth. I know, I've been missing in action. Unfortunately, a few family incidents that I had to take care of, then traveling quite a bit. So I was in 2 different countries just last week, and it has been extremely busy at work. So I really apologize for not posting more content. However, I shouldn't be traveling again until January, so I'm gonna stay here in the castle. Plenty of time to record daily. No live stream this week, unless something major happens. Then I may do something on Saturday. Otherwise, next week will be the full normal, call it full normal week, and from that now on, we're gonna continue. Still, we are about 16 subscribers away from the magic number of 800. So if you could drop that like and subscribe, if you do enjoy the content, that would be great. Now, let's go. A lot of things have happened. Let's start with the bond market. Bond market keeps on proving to have established a double bottom, which is quite profitable, which is quite bullish in terms of charting. For the future, people are, bonds are now, people were capitulating. Bonds are now going to go to TLT is going to go to the 80, to the 70 ranges. We're going to see interest rates at 9%, 8%, because I was hearing some of these things. I said, no, to me, the biggest bullish event for bonds that we've seen was exactly when all the top economists were saying, there's no way we're going to have a recession. The Fed was saying, no way we're going to have a recession. The major banks were saying, no way we're going to have a recession. So guess what? A recession became immediately more likely. You may recall when I created this channel back in June, what was the narrative? Recession by Q3 or Q4 2023, second Great Depression, stocks are peaking, going to go straight down. Crypto is finished. What else? One of my preferred ones, late summer. Oil is gonna go to $100. And no, late September, early October is gonna peak. Guess what? That's what I said when on CNBC you could read. No, on Financial Times, hedge funds positioned for $100 oil price. They don't understand that if they disclose that information, that means they already bought. What can they do after they buy? Sell. My God, what a crazy concept, right? What an amazing prediction. Did say gold was going to go to 1850, which it went. I said end of July, ended up going end of August. So my bad on that one. Now we've seen a recent spike in gold, but we are back close to the 2000 level. Right on cue, by the way, the same day that gold hit 2135 or so overnight, here comes a Peter Schiff video shouting at you to buy gold. Ever since he posted that video, of course, gold is down more than $110. Meaning it's a very nasty reversal. It's a very ugly rejection at the 2,135. And here is the kicker. You see, Peter Schiff will talk about everything inflation adjusted except the price of gold. And you may wonder, why is that? It's very simple. Because if you just take the government numbers, assume that the CPI is truthful, which is not, but just assume it is. If you take those numbers, gold needs to go to 2,500, 600 just to break even, adjusted for inflation, versus 2011. That's it. Just to break even. You see, Peter will always talk about everything. Inflation adjusted this, inflation adjusted that. Maybe the stock market goes up, but with all the inflation, who cares, right? The Zimbabwe stock market performed very well. So he does this shtick, but he never talks about gold price adjusted for inflation, because it's even worse when people say, gold preserves wealth, gold preserves its worth. Really? If you bought gold in 1980s, You need gold to go to 3,300 just to break even, adjusted for inflation. Just to break even. 3,300. We are 1,300 rally away from it. Okay? So, but in any case, we did see the rally, particularly over the fears of escalation of conflicts in the Middle East, which is a big unfortunate event of our time. Not a new conflict, just a repetition and a, if you will, aggravation of a previous incident. Now, I'm not a specialist on that conflict, so, you know, I prefer to look at it in the sense of, okay, how is this going to impact my life and in terms of what I discuss in this channel. However, to me, the loss of life is always tragic, regardless of from where it is. So I'm not taking sides. I'm really not a specialist on this, so I really avoid talking about things that I really don't know much about. Now, stocks. Dow Jones, as I said, the bond market, as long as it remains stable, moving in the right direction, that means that stocks have more room to run. You see, Dow Jones is about 1,000 points from its all-time high. I'm not talking about the closing high, talking about the all-time high that it hit on a specific date. The Nasdaq 100 is about 3 or 4% away, and the S&P 500 has crossed the 4,600. We've come back a little bit to the 4,560, 550. As I mentioned, we've been in this channel 4,200, 4,600 for a long time. Sometimes we go a little bit below, like the 400, 120 something that happened in October. Sometimes we go above, like in the summer, 4,630 or so. However, we are still coming back into the channel. Now, the more times we try to pierce through it, the more likely it is that we eventually gonna pierce through it. However, in my opinion, it's not gonna be just a straight line up unless a big catalyst happens, like, I don't know, a ceasefire and real peace talks in Ukraine and Russia, for example, whatever the case may be, okay? So, what caused the big sell-off in stocks in the past was the bond market getting all ballistic. What I also said, if you're looking for potential issues in the future, look at China. It's going to be a problem. Guess what? Moody's, the rating agency, just downgraded the Chinese debt as the country is back to stimulus, blah, blah, blah. A lot of things getting a bit out of control. While people will talk about, oh yeah, it's the commercial real estate and the banking crisis. And no, everyone is aware of those two things. Look at things that people, what do people believe? Government debt is very safe. China is going to take over the world, right? These are the two beliefs by all the economists and specialists, etc. So those are the two potential things that may throw you off and may catch you off guard and eventually lead into a black swan. And guess what? Those have been the problems, most of the problems in terms of sell-offs that we've seen. What did I also say? Expect lower inflation. So Eurozone inflation is now 2.4%. It was expected to come at 2.9. Came at 2.4. I have a feeling that the November CPI will also come better than expected on the lower side. So finally, now the market is pricing rate cuts, which I do believe they're going to happen next year, Q1, Q2. It's a bit of a guess. I would say probably Q2, but we'll see. And the thing is that people need to understand this, very important. So rate cuts is what everybody wants, okay? But it's a buy the rumor, sell the news effect. What does that mean? You're gonna see a ramp up on risk asset, and then when the cut actually happens, you have major sell-offs, and those sell-offs tend to last. They don't go like this or like this in a straight line. Of course, you have movement, But that tends to last 2 to 3 months, which is when the money that is being pumped into the system again starts to find its way into financial assets. So never forget, rate cuts are actually what is expected and what people want, but when it actually happens, it's a big sell the news event. Speaking about sell the news event, so here we are. Bitcoin 38k, we broke that. Where we went afterwards, 42k, some sell-off. We are now above 43k, and at least at the time of the recording, and 45k is another big item. Why is it a big number, 45k? Because if we hit 45k until the end of January, we are on pace with the previous cycles. Now, on this little pump, very few altcoins are actually pumping at the same time, so it has been mostly Bitcoin driven, a little bit of Ethereum, which is normal. Q4, I've said this in Q3, right, before it happened, Q4, Bitcoin tends to overperform, Q4 before the halving year, Bitcoin tends to outperform, Ethereum tends to outperform Q1 of the halving, and altcoins outperform, of course, in the last couple of months. So in this case would be February and March. Now, Bitcoin spot ETF seems to be a surety around the market nowadays. I mean, it's just a matter of exactly when. I got something wrong, need to say this. I expected the spot ETF to be approved in November. It wasn't. And I also had a little feeling that the SEC would drop charges against Richard Hart late November, also didn't. So those two guesses were wrong on my side. And you know, I always keep it real. If I get it right, I tell you. If I get it wrong, I also tell you. I do believe it's a matter of time before it's going to get approved. I think the approval is coming very, very soon. I think the market is also pricing it. Once again, Bitcoin halving, spot ETF. Buy the rumor, sell the news events. So, what is Peter Schiff doing, for example, is, when the ETF comes out, it's going to be a big sell-off. And he's going to try to say, I told you, everyone, blah, blah, blah. Yes, it's a buy the rumor, sell the news event. I mean, like all the halvings, when Bitcoin futures came out, same thing. You don't need to be, when the Coinbase IPO came out, same thing. You don't need to be a magician or a Nostradamus to figure this one out. But the thing is, this is what I want to challenge. What does it mean Bitcoin crash? Bitcoin crashed from $1 to 20 cents. Bitcoin crashed from $30 to $2. Bitcoin crashed from $1,400 to $200. Bitcoin crashed from 20,000 to 3,000, from 14,000 to 3,800, from 65,000 to 29,000, from 69,000 to 15,000. What does it mean Bitcoin crashed? Yeah, and the price you pay for the best performing asset class in the history of mankind is called volatility. You see, founders of coins and exchanges get rich. Buyers and holders of normal projects get rich. Traders, which are the ones caught in all this volatility, get destroyed. Those ones pay the others. That's it. Now, let's go and finalize with my bags. Pulse Chain, PulseX, X, Hedron, Icosa, etc. We are a little bit under pressure again. I do like the underlying fundamentals. Liquid loans came out. About 91 billion Pulse is now locked in the protocol almost from day one. I do believe we're going to see altcoins in general pumping after the Bitcoin rallies. This is my opinion, not financial advice. We'll see if I'm right. What I'm liking to see is that the active daily users is actually increasing, and there's something called Metcalfe's law, in which every time you increase the number of users, price should increase squared the increase of number of users. So what I mean by that is, if your user base goes up tenfold, price should go up 10 squared, which is 100-fold. That happened to Shiba, to Ethereum, to Bitcoin, to XRP, XLM, whatever you name it. it seems to work. I mean, take it with a grain of salt. Nothing ever works. But in any case, I still remain confident. I'm trying to accumulate as much as I can. And I'm also on the lookout for some narratives to start popping out very soon. More credible ones. I do think the AI cryptos came a bit too soon in the cycle. What's going to be the next one? It's going to be monkey coins. It's going to be, I don't know, it's going to be, I don't think ICOs are going to be that. It's going to be third cycle. So I do think those will be, much harder to get. Will it be a certain type of gaming? Will it be interchain operability like Chainlink? Will it be, I don't know. Will it be decentralized exchanges? Who knows? What else? Yeah, we removed, of course, besides the big updates on the price of Bitcoin, which obviously takes along the rest of crypto eventually. So Bitcoin tends to move first, Ethereum second, and then the altcoins afterwards. We are still basically repeating the cycle, despite the high interest rates, despite the fear of this, fear of that, election year coming, blah, blah, all of these things. The truth is, if you take this cycle, you look at the cycle from the Chinese Ponzi scheme at the time, the top plus token, the plus token that collapsed. We are pretty much, I mean, if you take out the dates and the price, they look identical. So that also tells you a lot of noise has come around, and the point is, if you actually come out, zoom out from the chart, and you look at it peacefully, non-emotionally, so we're just repeating the cycle. Now, I want to say something because this is important. I'm starting to see a bit of euphoric news, and these may be, short tenor top signals, if you will. But for example, you have like Max Kaiser talking about Qatar investment fund is going to bring $500 billion to buy Bitcoin, blah, blah. Look, man, you see, this is the opposite of the bottom. So the bottom is bad news after bad news. Documentaries about how crypto is a scam. FTX collapse. Binance is about to collapse as well. Those guys go bankrupt. That guys go bankrupt. Crypto is finished. You're never going to have a bull market again. That's it. Over. Sell everything you can, blah, blah, blah. So this is what you see in the bear market. You turn on CNBC, you cannot even find crypto anywhere because you really need to be looking around. Now the reverse of that is UAE is going to go all in crypto. Qatar investment is going to put in, $500 billion. I don't know, 20 trillion is going to come to crypto through the ETFs. The entire South America will have crypto as their reserve currency. I mean, this kind of stuff. So this is the opposite, okay? So just like what I'm starting to hear. Oh yeah, the Bitcoin ETFs, yeah, it's going to be by the rumor, but then an even bigger by the news event. See, you sure? You really want to bet on something that has never happened in history of markets? In markets history, you've never seen a by the rumor, by the news event, but people are now creating the narrative that that's what's going to happen. That's my point. That's when you're turning the bullishness over, and this is when you start to see this kind of craziness that you saw on the bear side, but now on the bull side, okay? But let's take one step at a time. A lot of things were covered on this video. I understand it's a bit of a longer video. I apologize for that, but I had a lot of energy and spicy stuff here holding out. I hope to see you guys in the next videos. I hope that you like and subscribe. It greatly helps the channel, and I thank you very much. And I apologize once again for my semi-disappearance, but I'm back full time, and let's go. Mother effers, we are close to the halvening. We are close to the fireworks. We are getting closer and closer every single day. For after all the pain and suffering and misery and doubt and feeling like a bunch of idiots, maybe it's time for us to have a little bit of fun. But never forget, and I'm going to be the most unpopular YouTuber at that moment, Whenever you feel that you're having too much fun and that you are Warren Buffett and all of these things, most likely that means we are closer to a top than to a bottom. But nobody wants to be the party pooper. In any case, being transparent and honest is always very good. Be careful out there, guys. The influencers are multiplying. Now they're pushing Terra Luna into people. Careful, guys. There's going to be a lot of that crap. And I'll catch you in the next one.